We've seen a strong recovery in financials since the lows last year. However, we see room for the continued performance of the sector. We expect this to be supported by increased confidence in economic reopening as the vaccine rollout progresses. Despite the recovery, we believe the sector continues to trade at attractive valuations in both absolute and relative terms. The sector has outperformed by only around 5% from market lows last year. This compares to an average outperformance of 23% looking back at the last 9 crises, going back to 1990, and suggests there is room for further outperformance as confidence in the economic recovery builds. In what has been a severe downturn, the banking sector has shown a high level of resilience, supported by the strengthening in balance sheets in preceding years, along with government stimulus support. Asset quality is now on an improving trend, while first quarter earnings have been supported by releases in loan loss provisions, having been front-loaded last year following regulatory changes. This is a key change from previous cycles, when provisioning previously was made on an incurred loss basis and therefore had delayed the hit to the P&L. In contrast to the experience during the global financial crisis, banks have built capital during this downturn and are in a position to return significant levels of surplus capital to shareholders. We expect the removal of the remaining restrictions on dividends and buybacks to be a further catalyst for the sector, with capital positions supporting a sustainably high yield. As the most sensitive sector to the reflationary trade, financials would be a prime beneficiary of an upward shift in inflation and interest rate expectations. And as the largest constituent of value indices, it provides diversification from growth sectors that have benefited from ultra-low rates. Given company-specific risk, we think it's important to take a diversified approach, with a Polar Capital Global Financials Trust investing globally across the sector and in developed and emerging markets. Given the stage of the cycle, banks is the trust's key overweight, but we're also seeing attractive opportunities across insurance, diversified financials and fintech.